Welcome to RANsquawk's e-morning briefing for Monday the 13th of July of 2009. We've just gone through 8:30 now, so we'll just take a quick check around the markets and also a bit of a review of the weekend and overnight press. Starting off then in Asia, some comments coming out of China. A central bank research team in a latest report stating that Beijing should flexibly adjust interest rates and banks' reserve requirements in accordance with changes in market liquidity and bank profits. Then over in the more global front, and quite a lot of US headlines coming out of the US Treasury Secretary Timothy Geithner, who said over the weekend investors want to invest in the most liquid and safest markets, which is that of the US Treasuries, and said they're not worried about calls for a new world currency, and said was committed to a strong dollar as the reserve currency role. Now, as according to Geithner, he also said the decline in the US economy has slowed dramatically, but there are still some enormous challenges ahead. And on a similar note, in terms of a global US picture, the President Obama spoke over the weekend and he rejected the idea of a second stimulus, saying we should give recovery time. And White House's Summers, the advisor to Obama, also noting that it doesn't think the worst is over as of yet. Just taking a quick look in terms of other news, obviously today the economic calendar is very light. No major data coming out of either the Eurozone or the US. We'll see a Bank of England reverse auction a bit later on this afternoon. Much of the focus though is very much on tomorrow's session. And we'll see the first of the major companies, Goldman Sachs, reporting their second quarter figures. According to weekend speculation, that in the Sunday Times writes that bankers are set to defy the gloom at the moment with a bonus bonanza. Goldman is expected to reveal Q2 profits of some £2 billion worth tomorrow after raking in fees from share and bond issues around the world. But again, at the moment, the European bourses are trading inside negative territory with a bit of caution ahead of that earnings release and the general influx that we'll get throughout the week from especially the S&P 500. Elsewhere, in terms of the Nikkei in Japan, though, that did fall some 2.6%, so it did close at its lowest in 8 weeks, hurt by growing political uncertainty over in Japan after news that the embattled Prime Minister Taro Aso is set to call for a general election for August 30th. Elsewhere, in terms of UK news, gilt futures are slightly outperforming European government bonds this morning, playing somewhat of catch-up after that surprise Bank of England decision yesterday sent gilts tumbling last week. So a bit of recovery there for gilt futures, but also as well the pound, we're already down in cable around 150 pips this morning. A couple of pieces, pretty doom and gloom over the weekend. Firstly, Britain cannot fund another fiscal revenue or fiscal rescue, according to the IMF. They report that the UK is one of, or is the only major economy that wouldn't be able to put together any further fiscal stimulus if it were required. Similar to that as well, on the banking front, Lloyds Banking Group, according to speculation in the Sunday Times, are set to report a further write-down of some £13 billion worth. Other comments as well from the UK that some analysts have noted is from the CEBR think tank, who've said that the UK economy will need around £100 billion worth in terms of tax and spending cuts in order to get the fiscal deficit back on track. So again, just for the calendar, it is very light. The only thing we'll be noting will be any potential comments from ECB's Trichet. He is due to speak at 11:30, giving opening remarks. And then the Bank of England's reverse auction, slightly smaller size given that announcement last week. They're going to slightly slow down some of the programme to extend it over until the August period. So they'll be buying back £2.25 billion worth of 2022 to 2030 durations today.